So good morning, and thank you for joining the Hiremii Limited Investor Briefing. My name is Jane Morgan, and today I am joined by Hiremii's Managing Director and Chief Executive Officer, Andrew Hornby. He'll be providing a company update and engaging in a Q&A session. So to ask a question throughout today's presentation, please use the Q&A function at the bottom of your screen. Andrew, over to you.
Morning, guys, and thank you, Jane, for organising this presentation this morning. So thanks to everyone who's joined us. It's September, so we had some news flow last week in terms of our annual report release. It was a good finish to the year, so I thought it's a good time to just update everybody in terms of current activity and where we're heading. Quick disclaimer, so please take the time to have a look. It's also available on our website. And without further ado, we'll jump in. So look, in terms of just getting straight into the technology, obviously that's a big part of our business, and I think what people are interested to see, where we're heading and what we've got planned on the technology side. So the big audacious hairy goal that we've got, and I think we've discussed this many times throughout the past sort of year or so, we're on our way to trying to create a fully automated AI-driven recruitment process. So what that means is we're taking all the traditional processes that happen in recruitment, we're taking them sort of dissecting them, sort of de-engineering it, and looking at how we build an automated platform so that users can carry out the process in a much more sort of efficient and automated fashion. Obviously, the goal there is to try and drive productivity and efficiency as much as possible, and ultimately reduce the cost of hiring for organizations. So we are pleased at the moment to introduce sourced AI. So we feel that we have referred to the Hiremii platform a number of times, and we really wanted to sort of capture what the AI industry looks like at the moment. And we think sourced AI is a great concept. So essentially, our processes and roadmap will sit within the sourced AI framework. And that's really set up in three main components. We've got engage and source at the beginning, which is part of obviously right at the very beginning of a recruitment process. We've talked to the market before about AdWriter. So AdWriter is a GPT-driven automated job ad writing tool. It helps organizations write very efficient, quick adverts. And with the increase in use and real sort of forward approach that ChatGPT has brought to the market, we can integrate that and power a really good ad writing tool for our customers. The next piece, and something I've been talking about recently, which sits in the engage piece, is our Copilot. So Copilot will be a Google plugin. It'll utilize ChatGPT, and it's going to help create personal outreach emails. So we're really going to be able to use those sort of large language models to scrape data and have very efficient ways of communicating with candidates. So we've got both the passive and the active sort of way of engaging with candidates there with the two products. The next in line, so when you're engaging your candidates and you get them in, we've got Shortlist. Now, Shortlist, as we've talked about before, is really the brains that sits within the Hiremii platform. Shortlist is our own proprietary model. It was put together by a bunch of very intelligent data scientists, and obviously it's domain specific for recruitment. So the shortlisting is going to take those CVs from a large number of CVs to an accurate shortlist that organizations can run through very quickly into an interview scenario and sort of midway through the process. From there, Videofy, or CV Videofy that we're calling it at the moment, is converting CVs from a sort of static traditional CV into a dynamic visual summary. I'm going to provide a bit more information on what that looks like and how that fits within our current structure just shortly in a few moments. The last piece there is the processing. So this is where we see an opportunity to really fill the gap of monetization and commercialization. So at the end of a process, an organization chooses that they would like to engage somebody, say on a contract basis. We can pass that through our traditional processes, and a lot of those are integrated with external technologies. And what that enables us to be able to do is payroll and manage those contractors through the inverse business, which is, I think, as people can see, is very good at managing payroll and contractors. So it closes the loop on the commercial opportunities that we're working through. So that's sort of the roadmap. I've put a calendar 224 roadmap in there, and I'll just provide a bit more context around detail on specifically two of the short-term scopes of work that we're looking at. So first scope of work, and this is what we've touched on over the past couple of presentations, is the Copilot product. It's enabling someone to, I guess, 10x the way that you personally outreach and get candidates through using a ChatGPT form to be able to link in any process. So if someone sat on LinkedIn or someone sat in their ATS, as long as we've got candidate data, we can put together really succinct, very quick methods of engagement and communication. And that is personalized to somebody's history, somebody's experience. Now, this is something that we spent a lot of time engaging with potential users to really identify a customer need here. And absolutely, there's a customer need for better quality, personalized engagement. There's obviously a lot of unpersonalized, scripted, generic stuff out in the marketplace. And I think in candidate short environments that we currently still live in, having something like this that's going to help organizations do it quickly is awesome. So there is a beta version of that. We're just in the middle of dev at the moment. That should be finished this month. There will be a short period of fine tuning and feedback. It's not going to be a long period. We've designed the dev so that we have a product that's product ready. So we'll be very quickly moving into full commercial launch, and I can provide a bit more information in terms of where we're at from a marketing perspective on that. We've done quite a bit of work internally just to make sure we're ready to go. Moving into CV Videofy. So look, there's a couple of things that play with CV Videofy. We're an innovative business. We're looking at ways of bringing in AI, and we're looking at ways of changing the game. So how do we move from a traditional recruitment process to being a technology AI driven? And for many, many years, the standard use of providing profiles has been a static CV form. I think they're getting outdated. We're getting told that particularly coming through universities, they're looking at different ways of engaging through CVs and profiles. And Videofy gives us that opportunity to do all those things in a really cool fashion. So essentially users can have their CV or resume automatically transformed by a large language model, generates an AI-based avatar video that summarizes skills, experience, and qualifications. It's a first of its kind concept. It hasn't been done. It's not being done. We have spent some time on client validation and candidate validation. Everyone agrees it's one of the coolest things that they've seen in the recruitment space. There's a list of benefits there, both to hiring companies and to candidates. It's a two-sided marketplace opportunity, so candidates get to create this at low cost, and clients get to use this in a process that will enable them to review CVs more efficiently, more effectively. You can collaborate, you can sit in a room, you can watch the videos. They're very cool. So I'm happy to follow up and just give everyone an idea at some point about what that looks like and how you're taking that static CV information and really creating an absolutely awesome avatar-based profile. So very, very cool. So rest assured, we're targeting a lot of AI-driven, extremely interesting concepts at the moment. So that's just a bit on the technology side. Obviously, we put our annual report out last week, and we had a really good finish to the year, and equally a good start to FY24. We've addressed the market with obviously with the report, but I haven't talked around sort of a bit of context around here. So the key highlights that we put in the market release last week, we hit an FY23 top line revenue of 20.8 million. It was up 82% on the prior year. 95% of that revenue is reoccurring. So we've structured the business in a sense that we have predominantly long-term contracts, and a lot of those contracts continue to to roll over as well. We spent a lot of time and effort building in some awesome clients. They're very steady. They're usually diversified themselves in their own portfolios to energy and resources, particularly some of the big, exciting clean energy projects. So we're very well placed there. Hopefully we can continue that as we go. We were able to lift our gross margins. That's important to us as a business, and we're certainly targeting further improvements in gross margin over the course of FY24. It just enables us to make further investments in the business and obviously just keep us in a stronger position. So we're not chasing, the big revenue. That's not our focus. Our focus is revenue and GM. So we're building a quality business. Cash receipts were also up strongly. We're very good at collecting our money. That's obviously important as a small business. We have good clients, very strong clients, and with good balance sheets themselves. I think our debtor days are sort of somewhere between 30 and 35, which when you're working with global tier one companies, that's pretty good. So we have very minimal concern around debts and things like that. We were able to drive down our operating expenses again in relative to our revenue. It was nice to see that down to 16% of rev versus 27 the year before. So that's a constant focus for us. Obviously, we need to invest, but we're being very careful with our OPEX as we go. In terms of cash, so we finished the year at just 1.9 mil. That fluctuates up and down due to timings on payroll, ATO payments, and things like that. So hopefully our investors agree that we certainly, from a recruitment standpoint, put some good numbers out. And look, with that, I just wanted to sort of provide, I guess, an up-to-date sort of mid-period update of where we're currently at. So combined revenue for July and August has come in at approximately 4.47. It's obviously unaudited at the moment. That's the 2 months of July and August. Our contractor book increased by 18% in that same period. What that means is that is the number of contractors that we have engaged, have signed contracts, and either have started or are starting this period. So we should see a strong continuation of this trend through September. I think there's a day less in September than there is in August from a working perspective, but we see another strong period ahead. So look, we're targeting a good finish to this quarter. We're at record contractor numbers, and things are going well in that side of the business at the moment. So look, there was 3 new clients added in August. 2 in particular large tier 1 resource and energy companies. One of those in particular is the Australia's largest privately owned resource company. We're very proud of that. I think that helps to show and demonstrate the strength in the Inverse brand when those caliber of companies are coming to us to look after their resources. So we're pleased that our first deal has been done. It's happening very quickly as we speak. So we're comfortable around hopefully a good future with that particular company. Our first assignment with, as I said, one of the world's largest energy companies, employs over 100,000 people, delivering large-scale energy transition projects. So again, new company for us, hot off the press, one of the world's largest in this particular space. We're very, very pleased that they've come to us. They're looking to build out capability in WA, and they've selected us to help them on that journey. So we're just in the process of signing up with those guys. And again, we see that as a fantastic opportunity for the Inverse side of our business. We've also signed the first deal with a majority-owned Indigenous company. That's been on our radar as something that we were hoping to try and achieve. And we've done that just recently. So that's fantastic to be working and supporting a majority-owned Indigenous company. And that's the first of its kind for Inverse. So look, small asterisk at the bottom there, and just to put some context around it, when we sign contracts with new customers, we don't know the value of those customers on day one. We sign, in terms of traditional recruitment side, we sign master service agreements. They're open-ended. we are pleased to have our first PO with the one I was referring to earlier. But there is no guarantee of revenue going forward. What I would highlight is and just for additional context is, one particular client that we have. I think we've talked about Technip Energies before. Big multinational player in that EPC and engineering space, particularly with traditional and new energy projects. We signed those guys up just over a year ago. We had zero presence other than some good relationships in that business. And I think now we're at about an annual recurring revenue of $3 to $4 million. So whilst we don't book that on the day that we sign a contract, that shows that with some good service, good delivery, we can take those companies from zero to that sort of revenue very quickly. We have a number of those organizations that we're very proud to be working with. And certainly as we go forward, we'll be looking at adding more of those organizations to our portfolio. So yeah, look, it's short and sweet, guys. I'd certainly welcome some further questions and clarifications from anyone. So I'll pass the mic back to Jane. And if you've got some questions, feel free to fire them through Jane and the JMM team. Thank you very much for listening.
Thank you, everyone. Andrew, I might just get you to stop sharing your screen there. And if we do have any questions, please feel free to use the Q&A function at the bottom of the screen. Let me jump into it. And Andrew, this one's come through a few times. Is the company looking at further expansion into other territories?
Yes. In a nutshell, Jane, we are considering expansion in other territories in Australia. We're working with companies that have a presence across the country. Look, there is still much more that we can do in WA. We're in a very, very good position with a number of large organizations here in WA. There is certainly ample room for us to continue scaling our business in WA. But we also, with those large companies, and they're getting such a good service, I think, from us here, that we are being asked, can we support in Adelaide? Can we support in Queensland? Can we support in Darwin? And those sort of places that really complement, what we're good at, energy resources, engineering, and those kind of things. So it's on the radar for us. Maybe in time, you'll see further expansion in other territories. Yeah.
Wonderful. And so with the soft launch already underway for the AI Copilot design, are you finding that there are any other additions needed to the tech?
Look, we mapped it really carefully and in tandem with mapping the development, so we have a product that is available for people to jump on and use. We've been working on that marketing strategy as well. So it was really well mapped. We kept a very tight budget on it. We're working with a good team. So by the end of September, that should be ready to hit market. The goal with Copilot is to release that as a SaaS product. It will initially be a freemium version. So we want people to use it. We want people to enjoy it. We want them to be delighted through the product. And with that, obviously, we'll create demand to convert those users to customers. I'll preempt just an additional piece with CV Videofy, because our approach to CV Videofy will be slightly different. We see an opportunity to leverage the inverse business there because, we have upwards of 10,000 candidates on our database. We obviously have 54 active clients, but we have a number of other clients that we engage with as well. And there is an opportunity for us to utilize our very experienced recruiters to open up CV Videofy to that 10,000 people on our database. And also it opens up the client side for clients that we engage with as well, who might be looking for a different service and something a bit modern and something a bit more innovative. So there's two different ways of approaching those two products. Also CV Videofy, I'm anticipating launching that product before the end of September as well. So.
Thanks, Andrew. Just further to that then. So you touched on this in the presentation as well, but so what is the marketing strategy, for the full commercialization of the AI Copilot?
Yeah, so look, we've got a really good team here. I've been working on a marketing commercialization strategy, go-to-market strategy throughout. They're actually presenting that to me this week. We've been working quite closely on it. And we've been, I guess, working through a full go-to-market framework of identifying who are our customers, who are our users, where are they, what's the channel to market. There's many ways of utilizing this. Obviously, your LinkedIn, your recruitment-specific media and influencers are probably the strongest channel that we have, particularly when we spending too much in the short term, sort of guesstimating where those guys are. So it'll be a sensible start to our marketing and sales strategy.
I know you talked about the AI tool being a freemium model for the moment, but when do we anticipate being able to report revenue on that?
Yeah, look, the all-important revenue. I'm hoping that we can start generating revenue through CV Videofy, probably slightly quicker, given that we have the ability, I think, to lever our existing recruitment business to do that. It is and will be, from a candidate perspective, a SaaS model that they can go on and pay. It is a one-off, so it's really about capturing volumes of candidates. The good thing is that the world is, has 2 or 3 billion workers, so there's plenty of market to go at and plenty of opportunity, obviously, in the very early stage to start ramping the opportunity with CV Videofy. So, look, without being at the mercy of making promises, we obviously understand that what our investors want to see is that we can commercialize tech and we can sell tech, and that's exactly what we're working towards trying to achieve as a business. The recruitment side of the business is certainly a nice to have subsidiary, but we recognize the importance of that SaaS revenue through the business.
Wonderful. Another one, and I'm jumping around here a bit. Can you explain the relationship with ChatGPT?
Yeah, look, ChatGPT has just brought in some really interesting opportunities, and organizations and individuals are trying to work out how ChatGPT can help them. How can it benefit them? Also, what are the dangers of it removing jobs and things like that? So it is a really interesting time with ChatGPT. We are not in the business of relying on ChatGPT to create all our products and to create a revenue. There is opportunities to lever ChatGPT to do things more efficiently, and it's important that we understand, our strongest moat still exists within shortlist. That is the brains. That's the domain-specific piece of software that we have as a business. If you look at ChatGPT and people are trying to work out how you use it, things like that. So it's we will certainly lever it because there are early opportunities to do that in this process that aren't being done already. So having a relationship is great. We've got some specialists internally who are becoming experts in prompt generation and things like that, which people have probably seen more of those kind of things popping up. But yeah, obviously we want to use it as a tool, not necessarily it be our whole and soul service.
Thank you, Andrew. Well, you can't get into specifics, I don't imagine, but so what does the pipeline of new contracts look like, and what is the typical sales cycle to win new contracts?
In terms of, so I think that question's probably a recruitment type of question. The sales cycles are usually fairly short and succinct. I mean, we're building predominantly a contract secondment workforce. So typically we get those mandates from our clients. We like to try and turn that around in days, not weeks. You have to go through certain internal processes, but they're usually sped up somewhat in terms of client processes. So we like to get an end-to-end sort of sales cycle of about 2 weeks. We're in a world where the inverse business is predominantly a passive candidate market at the moment. We're dealing with obviously big energy resources companies. There's still a lot more demand than there is supply at the moment. So hence why it's not necessarily a market where you put in an advert on Seek and just collecting the best 5 or 6 candidates and putting them forward. There's a lot more work that goes into that process. In terms of getting the work from our clients, look, as I mentioned, we've just signed up with the largest, Australia's largest privately owned resource company. So, that process from first engagement to getting a terms of order in place, a service order in place, was probably within 1 to 2 weeks. So when you're working with larger multinationals, it can be a little bit longer. You're going through a more arduous process, but it's not. Look, we're getting an opportunity to source a lot of this just based on reputation and service quality and referrals. You know, the opportunity with the big global company, which is very, very exciting, came through one of their joint venture partners, which is an extremely large Japanese utility company. So, you know, we, as a little business there, we're really competing on a big scale, and hence why we have a degree of confidence in the continuation of success in that particular part of the business.
Thank you, Andrew. So just further to that then, so do you have any plans to diversify into other sectors? This question is specifically for government as well.
Look, in the tech space, it's agnostic to sector, so I'll put that out there immediately. The tech is, predominantly we're looking at higher volume of organizations and industries, maybe your hospitality, your government sector, your large finance sector, things like that. There's pockets of modules within there, like CV Videofy, again, that's agnostic, but we can lever that into the energy and resources business quite quickly. In terms of the inverse recruitment side of the business, look, we're very competent at what we do in that energy and resources space. The biggest opportunity that exists at the moment is, traditional energy companies and resource companies looking to decarbonize. And, there's still a big challenge there that the world is still trying to work towards. And my gut feel is that this is not going to happen as quickly as maybe some would like to see, which means there's still a future, I believe, in large LNG projects still for the next 20 years, as we do start to, see a sensible transition to clean energy. So I think that's the biggest opportunity for diversification that exists within our portfolio, is capturing those large scale projects. And you're looking at two main methods there, without going into sort of too much technical, but there's the electrification and there's the opportunity for hydrogen and ammonia as a process. And I think we have a nice exposure, particularly to hydrogen. One of the areas I'd like us to have better exposure to going forward is the electrification opportunity. We're already starting to look and engage at offshore wind and things like that. It's a bit too early, but certainly it's starting to speed up. So the big opportunity there for across the business for a good suite of diversity in the portfolio.
Thank you, Andrew. This one's come through a few times. Just if you've got any views on the current share price and the company's valuation.
Yeah, look, I'm quite disappointed actually about where we are as a valuation. I think, clearly we have demonstrated to the market that we've got some growth opportunities. We have a solid subsidiary. Yes, it's a recruitment business. It's not super high margins, but it's a growing company, and our exposure is in energy and resources, and we're very, very well exposed to that. The technology upside, look, it takes some time. We haven't necessarily got there as quick as maybe some investors would like us to, but we're attempting to do big things that haven't necessarily been done before. We're doing that with a small team. We're doing that with a lean operating model, and we're trying to demonstrate stability as we go. So, yes, I see us being undervalued relative to some of those peers, and certainly I think where we should be valued in the marketplace. Like, we are focused on delivering really awesome technology with a strong recruitment subsidiary, and hopefully we can help investors understand that. We did have a disappointing price action last week. We think that was isolated somewhere else and has moved on, not related to Hiremii per se. It's a tough market out there at the moment, particularly in some of the smaller cap areas. But yeah, look, we have a really strong fundamental business. So hopefully that'll play itself out.
Yes, absolutely. And we'll be running around and marketing the company across Australia as well. So let's look forward for the next quarter. What should investors be looking out for?
Obviously, there's the two parts of our business. So we would like to be in a position where we can talk to the market about our launches of VideoFi and Copilot. We'd like to try and provide as much information as we can in user updates and hopefully even any revenue that we can derive through there. Obviously, we're 2 months into the quarter. So at least by the end of it, I'd like to obviously let our investors know about the journey that we've taken, where we are, and a live demonstration of where we're at. Possibly when we do our next presentation, I'll walk through some of those from a visual perspective as well, so people can see the tech and see what we're about. And I think once people feel it and see it and understand it, that'll be a good opportunity. I touched on the recruitment side of the business. I see a continuation of what people have seen in the past. At the moment, I'm seeing strong demand. I'm looking at our current pipeline of opportunity, and I'm hoping that we can deliver another strong quarter of recruitment numbers for our investors as well. So lots of exciting things to talk about over the next 4 to 6 weeks as we work towards that Q1 announcement.
Well, just on that actually, so where do you expect the recruitment business to get to in the next 12 months?
I'm cautious of providing any forward-looking guidance and things like that to the market. Look, I think hopefully, we've demonstrated a few things that I think underpins a reasonable look ahead. We've just announced there that we hit almost 4.5 mil in our revenue through the first 2 months, and we've increased that contractor book by 18%. So some of those guys will be starting in September, so we'll start to see the revenue flow through from the second week of September through. If you extrapolate those sorts of numbers over the course of 12 months, given that the majority of our contracts are minimum 12 months, then you can see sort of where we're tracking already versus what we announced as FY23 numbers. We finished there, I think, at 20.8. If we have zero growth from where we are currently and just doing some, very quick sort of maths, we're already at that 24-25 mil run rate already, and that's assuming zero growth. We're in a growth business, so I'm hoping that we can demonstrate that in the future, what people have seen in the past. So, and that was sort of what we tried to do by just showing the up-to-date numbers of where we're at, and we'll leave our investors to work that out based on some of the fundamental things that's available online. History does not necessarily mean you're going to repeat again, but that's certainly what myself and the team are focused on trying to deliver for the next 12 months.
Wonderful, Andrew. Well, that's all we've got time for today. And thank you all for joining us for the Hiremii Limited Investor Briefing. If we've missed any of your questions, please feel free to reach out by the contact details on the bottom of our ASX releases, and we'll get back to you directly. But thank you all for your time.
Awesome. Thanks, Jane, and thanks very much to everyone for joining us today. And as I always say, I'm very much available. If someone would like to reach out, please do so, and I'll be happy to answer any questions that you have.